Portfolio Builder members, this is July 23rd evening update. We'll start off with the top news, jump into how to calculate how much gold, silver, and cryptocurrencies you should own, and then take a look at the rest of our portfolio. Some small signs of progress in the U.S. trade war front. U.S. negotiators to head to China Monday for face-to-face talks. China has been importing more pork, and they've been having African swine flu, so they really desperately need that pork. China's foreign ministry, asked about violence in Hong Kong, cites U.S. officials are behind such incidents, advises U.S. to remove their black hands. China foreign ministry strongly opposes U.S. sanctions on China firm over Iran oil. Now, if you go to the email and look below the video, you'll see these screenshots. Our current recommendation is to have a 10% portfolio holding in gold, silver, and cryptocurrencies. And so I give you a few examples of how I would take a $10,000 account and invest $1,000 into cryptocurrencies. Take a $25,000 account and invest $2,500 into cryptocurrencies. Or take a $100,000 account and invest $10,000 into cryptocurrencies. So you can multiply that by whatever is most convenient to you to figure out how many Bitcoins, silver, GDX, GLD, Ethereum, Litecoin, and Bitcoin Cash you should put into your portfolio. So for most of you, you're trading in multiples of $100,000 who follow our program. So I'll just take a look at this sheet. So based on a $100,000 portfolio, you'd be purchasing 0.2 Bitcoin, 1.4 Ethereum, 1.4 Litecoin, 0.2 Bitcoin Cash, 60 into the SIL Silver Miners ETF, 60 shares of GDX, the Gold Miners ETF, and 30 shares of GLD, which is spot gold. Now, this is outside of the plays we're putting in the Tuesday, Thursday trade alerts, where we're playing on GLD and SLV. Now, if we look over here in the right-hand corner, you can see the allocation. This has approximately and I've rounded up or down to get as close to zero in each of these. So there's a little bit of difference between the exact percent holding, just because I rounded up or down to get close to zero in terms of cash held on each of these. But in general, we're heaviest on spot gold. That's our biggest position. Next biggest position is the combination of the silver miners and the gold miners. So that represents around 70% of our total portfolio. The next biggest position is Bitcoin, which is around 20 to 25%. And so this gives you the best assets to take on the first hints of the Federal Reserve lowering rates and hinting at QE. So I'm not expecting the Fed to lower a lot Tuesday next week, probably 25 basis points. But I do expect he will continue to hint at the accommodation of the Fed doing QE before a recession starts, because our rates are already so low, we're kind of trapped into a corner. So that's the breakdown. You can go look at these three examples. If you want to leave out anything and simplify your life, I would hold off on the Ethereum, Litecoin, Bitcoin Cash. Those are much more volatile, and for our purposes, the big positions in GLD, GDX, SIL, and then Bitcoin, they do the job. They do the job with a lot less volatility, because on the other hand, if the Fed disappoints, these are some very risky assets to own. Now, I don't think the Fed will disappoint, but that's why we're only at a 10% allocation. A month ago, we were at 5. Back in December, it was 2.5. So most of the growth in this portfolio has actually been realized simply from buy and hold. So if I take out the new addition to the account, which was 25K, yeah, you can see our portfolio jumps to 192% return. So we've been able to hit our target with only adding an extra 25K and then having been in on all this very early. So we got Bitcoin at 3,400, and of course it rallied up to 13. It's back to 10. Everything's pointing up for these sort of assets: gold, silver, cryptocurrencies. And so again, for those of you not aware, Thursday the ECB meets, central bank may lower rates slightly. Tuesday the Fed meets, and everyone expects a 25 basis point cut, maybe 50 if they're feeling very worried about the global growth outlook. Our SPY portfolio is up a lot, sitting at 9.4%. We did, the most recent trade was the 299 short call, and then a pretty cheap put option, which is over here, 195 put. So we're in the clear. We're well into the maximum profit this can deliver because the ETF has gone above our trading price. And luckily when we entered that, it was about $1.70 above. So we were able to have all the downside risk, cushion any small pullbacks from the call option we sold, and still earn the majority of the upside in the SPY that we predicted. And so I am expecting the SPY to continue traveling higher this week and next week due to that. Now I do want to point out I will be issuing new spreadsheets and tutorials soon, and every so often I do this because I've updated the template. UVXY is how we're going to get a little extra juice potentially out of this portfolio. And I'll tell you guys when it's time to put that into the mix, but right now it's not. So right now I think UVXY is going to get crushed much lower, and I think the Fed's going to send the SPY sky high. So we'll see. We're still putting the bumpers on so that we can't lose too much, and this will hinder the potential profit slightly. But on the other hand, if the Fed were to disappoint, or the US-China trade war were to escalate, or say Amazon or Google had some really bad earnings, any of those three things could tank the stock market pretty quickly. So we want to constantly have that put option to match every share of SPY that we own. Anyway, this portfolio has hit its maximum return on the previous trade as long as we trade above 299. No action there. The Tuesday trade, which was today, we got into a very wide collar trade on Apple. Apple went up about $1, so that's good news for us. The higher it goes, the more profit we generate on that one. The other part of the trade was a bull call spread on SLV. We needed to get above 16 to make something like 200%. Now we're just taking a part of the profit from Apple and reinvesting it right here into this SLV. So this is the short call at 16, but then we bought the call option at 15.50, which creates a debit and profits if we go above 16. It's about a 2-to-1 profit margin on that one. So we're sitting pretty on that one. We won't hit a maximum profit on this unless Apple goes all the way to 215. So we'll see if that happens. For now, it's up $1 since we got into it, which is great. And we're still waiting for SLV to climb. We have until next Tuesday to close all these out and repeat it. We'll probably be doing a very similar setup to this one next week in terms of having a wide collar on Apple and then a bull call spread on SLV. Now we might get a little more aggressive next Tuesday ahead of that Fed meeting, so we'll be able to do the trade before the Fed meeting and maybe go for something like, instead of the 200% return this one is set to generate, maybe we can go for a 300%. Now again, I'm taking a small bet on these from the profit that I'm assuming I'll generate from the Apple trade. Now the Apple trade has a set loss, so the worst case is we lose our debit on the SLV call spread, bull call spread, and we cash out of Apple at the put option we bought for 195. So we could lose some serious dough if the market were to pull back significantly on Apple right now. On the other hand, if the market were to fly up another $7 on Apple, we would be able to realize most of that profit. And most likely, if it did do that, SLV should be traveling higher, because this should all be on the thesis that the Fed is going to continue to lower rates and start doing QE, which will take pressure off the bond market and help flow some extra capital into stocks. Okay, so meanwhile, our third portfolio. Now again, this is the most important portfolio. With the Fed getting ready to potentially become a big buyer of bonds, this is very bullish for the bond market in the short term, at least. Now, maybe for bad reasons, but regardless, they most likely will start to manipulate the bond market in the next 12 to 24 months so that we can keep the U.S. government funded. And so currently, our allocation recommendation is to have 45% of your capital in stocks, 45% in bonds, which is this Thursday trade, and then 10% over in the precious metal cryptocurrency basket. And if you do that, you have a very, very protected portfolio. Plus, we have put options under the bonds and under the stocks. So if there is some sort of very rare event where they sell off at the same time, that could be detrimental to all these risk parity funds that essentially are leveraging back and forth between equities and bonds. Bonds goes down, they leverage into that, take profits off the stocks. Stocks go back down, and they're just going back and forth with tremendous leverage, trying to have essentially very, very, very little drawdown in doing so. But the problem is, if they get caught with both markets selling off at the same time, they can be forced to liquidate, and we might have a nightmare on our hands. So again, we're a little guy. We're not trying to get rid of $100 billion. We're only trying to get rid of, for most of our clients, between $100 and $3 million. And so that's easy. That's nothing. That's the little mosquito on the dinosaur. Plus, we have the put option right below our underlying assets. So we essentially have very, very little risk to some sort of catastrophe. So let's take a look at how this one's performing so far. So here was the trade alert on Thursday. Now this portfolio had just had a huge gain and jumped up ahead of the SPY portfolio in terms of total return over the same time period. But we got into this trade when the TLT was at 131.47. And today it is at 131.22, so it's down 20 cents on that. But that does mean the put option below the TLT will be slightly up, and the value to purchase back our short call option will have generated a profit. So we're probably about even on that. We did take a bit of the potential profit on that trade and do the same setup we just discussed on SLV with GLD. So we do need this to pop up to 134.50 by Thursday so that we can potentially get a double 100% return on that. So again, we're taking a safe profit out of the TLT, taking part of that profit and putting it into these bull call spreads on gold in the Thursday trade and silver in the Tuesday trade. So this will be a very repetitive play we're going to do over and over again. We're not risking a whole lot. The win rate is going to be probably 50% or less, but the potential gain on these is going to be over 100%. And so here's a look at the silver play, which is much more aggressive, where we're risking $120 to make a profit of $380. And then our GLD play, where we're risking $23 to win $27. So that's a wrap of what we have prepared for you today. Reminder, we have a live Q&A webinar Wednesday at 1 p.m. Eastern for our paid members, and Thursday at 1 p.m. Eastern for our free members. So keep a lookout for all the reminders, registration links, and emails for that. You are auto-registered, but sometimes it helps to re-register to make sure you get a fresh copy of the welcome link to join it. Trade schedule, SPY trade Monday, Wednesday, Friday at noon Eastern. Tuesday, we're currently trading Apple with covered call, a put option underneath, and we're taking a part of that profit and doing the bull call spread on silver in anticipation of an easing Fed and a new round of QE that people are going to begin predicting and playing into. And then Thursday, the same idea with the TLT, call option on top, put option below, and then we're doing the bull call spread on GLD. And again, we're making these all self-destruct. So you open it each week, close it out each week. It's at noon Eastern every trade. If you have any questions at all, please call Victor for immediate help at 505-203-0396. And so that's a wrap for today's evening update. New trade alert tomorrow on the SPY. And we will be issuing new spreadsheets and tutorials with the updated templates. All that's really changed is I've modified a few tickers, and I'll just quickly review that and let everybody off. So I did add UVXY on the SPY portfolio so we could potentially play the VIX. In the cryptocurrency tab, I have updated these. SIL, GDX, GLD, as well as the proper asset allocation to get this mix, which is heavy in spot gold, heavy in the miners for gold and silver, heavy in Bitcoin, and currently light in altcoin. So I'll be looking at a good time to go much heavier into these because they can really go up more like 10 times, whereas I'd be happy to see these other assets only go up like double, most likely. So as I see these starting to head to mostly double in price, that's when I would start to get more aggressive in the altcoins and probably take some profits out of these safer assets. So we're still very early predicting all these things will happen. On the Tuesday trade, we now have the silver ETF, SLV, so that's different than SIL. SIL is the miners, SLV is just plain old silver. And in our Thursday trade alert, where we'll be having big allocations into TLT for the long treasury play, we have this GLD right here. And we're not buying gold in either this portfolio or silver in this portfolio. We're only using a part of our profit to play that with a bull call spread on a weekly basis as long as we anticipate this long-term trend. In terms of buy and hold, that's where the gold, silver, crypto buy and hold portfolio tab comes into play. So I hope that makes sense. Again, 45% should be in equities. If you like to trade Monday, Wednesday, Friday, SPY is great. If you prefer to trade once a week, our best performing portfolio is our alternative Tuesday trade. It only trades once a week. It's a little bit more risky because we are trading specific stocks or baskets of stocks, but it's a lot less work. And then 45% of your portfolio should be following the TLT trade. That's on Thursdays at noon Eastern. And here's my recommended very simple basket. Where would I get these cryptocurrencies? The Robinhood phone app for sure. We have a link to that in the bottom of our email where it gives us both a free stock or some sort of freebie. But you can just go to your phone, download it. What's important about Robinhood is they insure the money deposited. You're not actually having to worry about storing this stuff because we're just going to sell it anyways and cash it back out to dollars. So we're not worried about being super secretive or fancy with security. So the Robinhood phone app provides great security in itself. Free commissions. It's a fast-growing broker. There's no phone support, so that is a downside. But that's really where I think the easiest place for people to pick up these cryptocurrencies is. Much easier than Coinbase, and which is not bad. That's also a good option. And also a lot easier than Binance, which has way more alternative cryptocurrencies and is a good place for more advanced crypto. But right now, I do think the big move is going to first come to Bitcoin before it comes to the altcoins. And that's just because of the cause of this are the rich Chinese and rich people around the world are seeing these central banks start to devalue their currency to try to fight off a potential recession, the U.S.-China trade war, Brexit, all sorts of stuff's going on. So that's the plan. If you have any questions, call Victor right now. If your free trial ended, you're getting all the content delayed. That's no fun. Or if you bought a basic program and you're interested in getting our Tuesday, Thursday trades, and you'd like to get a lifetime price, call Victor. He can help you out. We can save you a lot of money. 505-203-0396.